Every now and then, an IPO comes along that just dominates the conversation. And right now, that's the IPO for the National Securities Depository Limited, or NSDL. So in this explainer, we're going to break down why this company, one that usually works behind the scenes, is suddenly the talk of the town. So really, what is all the buzz about? Why is this one IPO getting so much attention from analysts, investors, pretty much everyone? Let's dive in. Okay, here's our game plan. First, we'll cover why this is such a major market event. Then we'll get into who NSDL actually is. After that, it's all about the numbers. We'll explain a really key term, offer for sale. And finally, we'll check out the market's verdict. All right, first up, this isn't just some random company going public. No way. We are talking about a true financial giant. And this IPO is a pretty rare opportunity to own a piece of the actual system that makes the Indian stock market tick. Which brings us to the big question, right? Who is NSDL? What does this company actually do that makes it so critical to India's entire financial system? Let's just start with this one number, because it says it all. 86.8%. That is NSDL's market share of all the assets held in Demat accounts in India. A number like that, it just screams dominance. It's practically a monopoly. So how do you get that kind of dominance? You become the essential plumbing for the entire stock market. Think about it. They were founded way back in 1996 as India's very first securities depository. Their main job? To hold all our stocks and bonds safely in electronic or Demat form. Every single time you buy or sell a share, it's NSDL in the background making sure that trade settles without a hitch. And their scale is just mind-blowing. We're talking nearly 40 million investor accounts and a network that covers basically every single PIN code in the country. Okay, so we've established NSDL is a behemoth. But how does that actually look as an investment? Let's get into the nitty-gritty of the IPO numbers. Here are the fast facts you need. The subscription window is tight, July 30th to August 1st. The price per share is going to be somewhere between 760 and 800 rupees. Now, you have to buy in a lot of 18 shares, which means your minimum buy-in is going to be 14,400 rupees. All told, the IPO is looking to raise just over 4,000 crores. Now, hang on, because this next part is absolutely crucial for understanding what's going on here. This isn't your average IPO. It's a special kind called an offer for sale. So, what in the world does that mean for you and for the company? To put it simply, in an offer for sale, or OFS, the company itself isn't creating new shares to raise money. Instead, the IPO is made up entirely of existing shareholders selling their shares to people like us. This means the money from the IPO goes straight into the pockets of the sellers, not into NSDL's bank account. And this just lays it out perfectly. In a typical IPO, a company raises money to grow the business. Build a factory, expand, you know the drill. With this OFS, it's totally different. It's simply an exit strategy for the current owners. So the key thing to remember is your money isn't funding NSDL's next big project. You're just buying shares from the big institutions that already own it. And who exactly are these sellers? Well, they're a who's who of Indian finance. We're talking major players like IDBI Bank, the National Stock Exchange itself, SBI, and HDFC Bank. These are the institutions that are offloading their shares to the public. So, with all that in mind, what's the final verdict from the market? How are investors and the analysts who guide them feeling about this pretty unique opportunity? First off, the company's books look great. The financials are really strong. For the last fiscal year, NSDL brought in over 1,500 crores in revenue and turned a profit of 343 crores. And you know what's great? A lot of that revenue is recurring from things like annual fees, which gives the business this really stable, predictable feel. That financial stability has the experts pretty excited. Top brokerage firms are giving it a big thumbs up, a subscribe rating, and they're all pointing to the same things. Its killer market position, the fact that it's almost impossible for a competitor to challenge them, and its potential for solid long-term growth. And we're seeing that excitement bubble up in the informal market too. Even before the official listing, the shares were fetching a gray market premium, or GMP, of around 16%.
That's basically a sneak peek at investor demand, and it shows that people are really eager to get their hands on these shares.
So let's boil it all down. What's the big takeaway here? It's that a foundational, absolutely essential piece of our market's infrastructure, the plumbing, remember, is now becoming a stock that anyone can buy and sell on the market.
And that just leaves us with this one really interesting question to think about. What does it actually mean when the plumbing of the market becomes a stock itself? It's a huge shift, and you can bet we'll be watching to see how it all plays out. Thanks for joining this explainer, and we'll see you next time.